Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar. Steve Miley on the call here for Trade Day on Wednesday, the 2nd of November. Welcome, everyone. We'll go through our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at some articles on the fundamentals from the major news wires, and then we'll take a look at the charts, potential trigger points into today's trading day. Okay. What I was going to say, anything to give you the heads up on? No, everything's back to running smoothly. So good, well done for James and the tech team for so we had that third-party issue, all resolved now. If you do still have any issues, please let us know by sending us an email to support@tradeday.com. And just to, I think, go back and just say about the Trader Mind again. Trader Mind a few weeks ago now. If you go and click in here, Trader Education in the members area, drop down to Trader Mind session. I'm going to open it in a new tab. And if we go in there, you'll see it in here. Okay. We're going to run another one soon. We'll put a heads up in the activity feed. We'll give a heads up in here as well, probably. But it's in here, and we'll archive this as well, so you've got the opportunity. But if you come in here and watch it, I think you'll find it very useful. It was very well received, so just a bit of a plug for that. Right, what have we had today already? So we've had European PMI data coming out today. So manufacturing PMI data. We've had the German unemployment change as well, kind of mixed in here. So PMI data, manufacturing PMI data from France and Germany, worse than anticipated in here, and the German unemployment. So they're running a day late. I think there's a pseudo holiday in Europe at the beginning of the week. I think it's is it All Saints Day? Yeah, I think so. And so, we were running a day late. Running a day late compared to where the US and UK data came in for this PMI data. So, we've got this European data this morning, softer than expected, worse than expected. German unemployment slightly better than expected in here. Eurozone as a whole also on the manufacturing PMI, worse than expected. What do we got coming up today? Well, obviously the big focus is later on the Fed. We'll talk about that in a minute. But before that, we do get ADP non-farm employment data. So remember, that's the precursor to the data that we have from the Labour Department. So we get the employment report at the end of the week on Friday. 2 days before so today is Wednesday, we always get the ADP. That's the kind of the guesstimate of what that number is going to be. So that's their estimate of what that should be. So we get the non-farm number. Used to be a very, very significant number. Not so much these days. So I'm just going to open a drink in the background. You can hear. So sorry about that. Gasping. Sorry, guys. So we have that coming up. We also get, if you're trading crude, if trading oil, we get crude oil inventory. So the ADP non-farm employment change coming in just about 40 minutes time. So we've got that coming up soon. And then we have the crude oil inventories at 10:30 Eastern. And then obviously it's Fed this afternoon. So 2 o'clock Eastern, Fed statement and decision. And then the press conference 30 minutes later at 2:30 Eastern time. Certainly keep an eye on all of those. Overnight as well, we also get service PMI start to come out. And we get it from China overnight. So we're watching for those Asian release. It's obviously after the bell, way after the bell, after we close. But nevertheless, that could have a bit of a little impact overnight on the overnight session. So something to think about going forward. Some of you trade the night sessions, I know. So keeping an eye on that as well. Those service XPMIs coming from Asia. What else we got in here? I've already mentioned that. Let's take a look at. And then we've got the Fed, obviously. So, very, very likely, guys. I tried to, suggest it to you all. Every time we have the Fed or anything like these kind of big events, it's likely, and I know you guys are day trading, and some of you trading on very, very short time frames. So if you're on a very, very short time frame, you can probably maybe try and grab something ahead of the Fed. But I mean, the chances are the markets are going to be fairly quiet ahead of the Fed. They've been very, very quiet overnight so far. European exchanges so far this morning have been very quiet. Futures a little changed on the US. So expecting probably not too much. I mean, ADP could kick us into life. So, certainly monitoring that. Then obviously the cash market open. that could give us some activity as well. So maybe trading smaller around those events, because there's not going to be very little directional tone, very little directional theme, very little on the trend building, I think, in either direction pre-Fed. Okay, so that is going to be the big focus clearly for the day. Right, 5 things to start your day in here. Let's start. Actually, let's just do a little look back to yesterday. So Wall Street lower yesterday. Wall Street slips as job data, dense hopes for a Fed rate deceleration. So it's kind of interesting now. We've got this kind of positive data. Good data is bad for the market, right? So we had a very slight dip really on Monday, and then with that decent rebound overnight. So when we were on the call this time yesterday, okay, we saw the markets up back. They've recouped the losses from Monday overnight, and we were sitting up near the recent highs, and it was all looking very bullish, and I was very bullish on the call, and everything looked pretty good. And then we had the ISM PMI number coming out as well. But then the market's has more recently been focused in on this job openings data, and it was actually the job openings data was higher for September, suggesting the demand for labour remains strong, even as the central bank has embarked on a path of aggressive rate hikes in an effort to bring down stubbornly high inflation. So basically, that's generally speaking, in a normal scenario, that is positive, right? It means strong demand for labour, more job openings. Okay. So it's good for the labour market. It's good for the the participants, those offering their labour. So it's good for on that front. It means that there's healthy demand from businesses, corporates, for labour. Okay, so all very positive, really. It shows a strong economy. However, we are in a bit of a situation of good news, positive news is taken as negative by the markets. We're in that kind of little bit of that phase. We don't want the news to be too good on the economy, because if the news is too good and showing the economy is still strong, if it's showing that the interest rate hikes that we've had globally, and in this case in particular from the Fed in the US, if it's showing that those interest rate hikes are not significantly slowing the economy down, if it's not slowing corporates down, if it's not seeing a loosening of what is a fairly tight labour market, if it doesn't see the labour market start to loosen, okay, then the issue there then is then that's kind of opens the door to the Fed being more aggressive on their fight with inflation by being more hawkish. And then the market doesn't like a more hawkish Fed. So kind of counterintuitively, kind of perversely, the market is taking this kind of positive data showing a strong labour market, a tight labour market, strong demand for labour. Okay. So look, investors have been paying close attention to the labour market data for any signs of weakening the job market, as decreasing wage pressures and easing demand would help reduce inflation. So basically what it's saying is also it's not just the fact that the labour market's strong, but the labour market strong continues to put upward pressures on wages. A tight labour market, a strong labour market means then tight pressure. Pressures on a tight labour market, meaning upward pressures on wages, and upward pressures on wages then is an issue because that feeds through into inflation as well. Okay, so but it is a little bit counterintuitive, right? So I just wanted to go through that and point that out. That was the reason, and it wasn't a big sell-off yesterday, but the market certainly dipped. There's not much in here. 5 things to know you need to know to start your day from Bloomberg. Obviously, Fed 75 basis point expected. We go to our Fed tool. Still only 87% though, so not nailed on. Potential for a 50, but very unlikely. But there is growing potential. We go to year end now. Actually, this is just jumped up a little bit in here. So this was higher, right? So this was the 50 basis point, and this is another 75 at the 14th of December meeting. So an increased chance now of a push. So in here, this is going to be 125 up. An increased chance over here that we have a second 75. These are reversed around. This was more in the 50s, and this was down in the 40s. So this is this is ticked up slightly over the last session or two in here. But if we go back to 5 things, yeah. So basically, but look. what are we saying here? There's little clarity in how the Fed proceeds from there. So we're expecting 75. There is an effort to rein in the hottest inflation for 40 years while minimising recession. It's a challenge for messaging because they don't want to ease financial conditions significantly. They need tight fiscal conditions to keep cooling the economy off. So he doesn't want to sound dovish, but he may want to go slower. Yeah, it's difficult. The messaging is going to be super important. This is probably the most important Fed meeting we've had. Because all of the others has been very, very clear of what's been coming up. They've done the messaging, it's very, very clear. And now we've got to the point of another 75 basis point hike. The market's now more indecisive about as we're coming to peak rates, where we expect peak rates to be. Remember, we're currently at 300 to 325, right? Okay. And this next hike, today's hike at 75 is pretty much nailed on. So at the end of the day, we're going to be at 375 to 400. Okay. And now peak rates from the curve is telling us they're coming in at, actually, this is pushed up a little bit as well, at 500 to 525. That was a little lower. That was at the 475 to 500, right? Previously. Oh, no, it's been at 500 to 525. No, I think that is actually pushed higher as well. This has taken over now at 500 to 525 as the more likely scenario. So the curve has started to price in a more hawkish Fed, but 500 to 525 from 375. So we're looking for another 125, right, to get to peak rates. So that could be a 50 and a 75. It could be a 75 and a 50. Maybe we only go two more 50s. Maybe it's 50, 50, 25. So the path going forward is fairly unclear what we're going to get. Okay, the curve's pricing what it's pricing, but it's a little unclear how we get there. And so the Fed have got to try to say, yes, we're going to stay stringent on inflation, but yes, we are maybe slowing down the pace of rate hikes potentially. And it's how they message that. So this could be one of the most critical meetings. And when we get this kind of indecision, when the market doesn't really know what to expect from the messaging, that's when we could have more volatility. So this may not be. Often when we get the Fed meeting, the market just kind of runs in one direction, okay? This could be choppy. So be very, very careful about getting tied to a position. It could be choppy, and it could be very different between when we get the actual announcement to then we get the press conference, and it could shift through the press conference depending on what is said, depending on Q&A. So just be careful out there, guys. It could be a choppy one through the Fed this evening, okay? So what else do we have in here? We already spoken about that, was yesterday. 5 things. I say there's not much else in here. China has ordered a 7-day lockdown of what's called iPhone City in here. So that's kind of a little bit of a negative, considering we had some positive news in here, looking to move away from zero COVID from yesterday. Corporates. So this is, none of this is really impacting us directly. Corporate wrapping here. State and local government lawsuits. S&P 500 futures little changed overnight. A busy calendar. We've already looked at the calendar, so nothing really for us to add in here. What else have I? So look, futures steady ahead of Fed meeting and dollar falls. We already looked at all of that, was in there. Fed to hike, big again, that opened the door to downshift. So this is what I was talking about, the messaging. Okay, the chairman faces a communication challenge, a briefing. Fed may slow soon, but doesn't want easy financial conditions, right? So they've got to really, it's a tight line, okay? Let me just go through the rest of the stuff on the Fed. Fed should stay on course, not pause too soon, Summers says. Okay, so this is Larry Summers, former Treasury Secretary, said in a tweet for the Fed to pause interest rate hikes very soon is badly misguided. A growing chorus for the Fed to pause is badly misguided. So he's saying they should run the course, stay the course. Okay. But he's not in charge anymore. So just on a little side note, we did get wheat spike higher more recently because of concerns about Russia pulling out of the deal with the export of Ukrainian grain. And Russia has agreed to resume that deal, and so we've seen wheat prices tumble, and that's being covered by both Bloomberg and Reuters. Morning bid, fed up, waiting. A look at the day ahead. So all about the Fed. We spoke about, they're talking about the yield curve in here, pointing to a possible recession. Comments from Fed chair will take the spotlight. Yeah, we know that. Okay, so it's all about the Fed and that yield curve inversion as well. We spoke about keeping an eye on that maybe later today. That 3 month versus the 3 month, 18 months forward. Futures edged slightly higher. Well, they're kind of unchanged to slightly higher, but I mean very slightly higher overnight. Fed set for another big rate hike may tamp down future tightening. Again, it's all going to be in the messaging. And where are we going into today? European exchanges, you can see in here, kind of mixed, but mostly unchanged. So, I mean, the CAC, the French index, down 0.2. The German index, the DAX, down 0.1. The FTSE's a little bit more, hit 0.4 lower in here this morning. And if we go and let's see where we are overnight in here, we did get that dip lower yesterday on the US equities. And look, we're pretty much flat unchanged in here going into today. So not expecting too much ahead of, maybe ADP and then crude oil could do something more likely the cash market open. Let's take a look on so we were, it was a very positive day. We're up here at the highs yesterday when we opened, negative day. But if we go on, this is the S&P first of all. If we go to the chart in here though, if we look at where we are with the retracement in here. So this was the rally from the end of last week. Actually, we went a little bit higher, so I need to just redraw that, actually. Let me see if I can grab that. Will it allow me to do that? Yeah. So if I take that across now. So we did actually manage to just get a little new high, and then we sold off after the data yesterday. But you can see we're holding around the 38.2%. We're definitely holding above the 50%. So from the rally, from the low from last Thursday, there's Friday's rally. You could even take it up and just look at Friday's rally in here. Let's see if it'll allow me to do that. Yeah. So if we take just Friday's rally, it's quite interesting there, and drop the low from Thursday. Dropped the low from Thursday, going up to yesterday's peak. Look, we held exactly at the 50%. So we held exactly at the 50% on that move. And if I drag it back down, no, that's dragging it and it's taking it across. I'll then take this one up. You can see we're flirting around the 38.2 of the rally all the way from Thursday. Okay. So it's just kind of oscillating either side of the 38.2, currently holding at that 38.2. Just rebounding from it. I mean, I think you just, in the very short term, it's a breakout of this little range in here. So the low is simply 52.5, and the peak is simply 81.5. Looking at the breakout there. If you want something more, if you want more reinforcement on the top side, I'd suggest we take a look at you put the fib on because of the just the setback we had yesterday. And if you put that on, sorry, let me extend that out if it will allow me. Yeah. If you put that on, I probably want to see it. So you can see it's fading around the 38.2. That's from the overnight peak. It's right around the 38.2. Probably want to see it through the 50%, get half of yesterday's losses back. So that's coming in around 38.90. So it's up through 38.90 would be more bullish. But you can see, 38.2% is giving us the cap at the moment at the overnight high from the breakout levels I just gave you. Let's take a look at the NASDAQ. So in here, not dissimilar story, the market dipping, having been relatively firm pre-open yesterday. And if we go and take a look at the 15-minute, we'll just zoom in on that. It's kind of the same story in here. So I'm just going to get rid of some of this. I want to leave this fib on, so I don't want to get rid of it all. So if we take the Fibonacci across, there you can see the market, again, going from the Thursday low to the very high from Friday, the market's holding just above the 50%. And if we take it up, and if it will allow me to just take it up, it's not going to happen, is it? If we take it then of the just Friday's move, okay, so I need to go a little higher on that. Sorry. So that's just Friday's move, okay? Then you can see we're held at the 61.8. So you need both of those on, really. So it's no coincidence for me. We're holding at the 61.8 of just Friday's move, and then going back, I take it out to the Thursday, Friday move, we're holding at the 50% of the Thursday, Friday move. And then again, looking for, I think just the overnight breakout parameters, you do have a little bit of a spike high there. So, and again, putting on the fib of the down move from yesterday, if we look at that and pull that across. So you can see we haven't managed to get above the 38.2, but then you've got this other spike high over here. If I just zoom in a bit more, you've got this peak in here, and that's right near the 38.2. So you've got the overnight is there. So 11,390, and then simply, we've got this low here is at 318.75, and then the low is at 288.75. But I think that's an important peak there. So above the recent overnight high, 390, you've got this spike failure high there, and that high there is 411 and a quarter, and then the 382 of yesterday's sell-off. I'm not actually quite clicked that on. So the 382 is like 11,415. So you got 11,411. Okay, and then around 11,415. So that kind of 410 to 415 area is going to be important above there. And then the halfway point is at like 450, around 450. So that's going to be important as well. So those are top side levels for me. Let's have a very quick nod to gold and oil. I'll start with oil. So a strong rebound yesterday, still a bullish theme. We get right up to the recent high from last week and set back this morning. Comes into this still with a bullish tone for me. 15-minute chart here. Yes, we've had a setback. Now we're rebounding. Look, you rebounded above that from above that low there. That low there is 87.52. We've rebounded overnight from 87.96. So it's held that low there. Higher highs, higher lows, very much intact. For me, this just looks bullish in here. You've got a little counter trend line you could draw on here, coming just from the overnight activity. We've reversed that. So yeah, I think, next trigger point on the top side to buy through would be 88.89 there. A little swing there at 88.89. That would be the next trigger for me. Top side, gold. So I hung on to a bullish tone yesterday, a bullish outside day yesterday, and then the market popping higher, having had a little dip from the peak, popping higher again this morning. All sets up kind of quite positively for gold. Looks more like a basing pattern in here now. Recovery next level, probably just above either the current peak, which is 59.9, or that peak there is 60.3. So through 59.60, this all looks like it could move into the mid 70s quite easily. So yeah, looking bullish on most of the stuff in there for me, but equities, I'm not, equities is for me, it's just wait for the Fed. There's an underlying bullishness. And remember, guys, in here, we have had a positive reaction to negative news, right? Over the past, since that CPI data went in. CPI data went in middle of October, market initially down, big turnaround, right? Last week, remember, loads of really negative earnings reports. The market then rebounded, huge rally on Friday. So bear in mind that we could get, if the Fed stay relatively hawkish, we could see sell-off and then rebound from that, because that's been the tail of the tape. Unless they really pivot to really tell us, right, we're going another 75 and another 75, right? They're almost certainly not going to do that, right? But they might indicate that they're going to stay on this 75 path. If they do that, the market will take that as hawkish, will almost certainly sell off. But then there might be a buy opportunity as well in there, because the market has reacted. It's taken bad news in its stride. Initially, we get the kind of negative reaction to more hawkish news, to higher inflation news that we've had from the earnings reports. You get the natural reaction, which has been lower, and then the market has turned around in the last 2 to 3 weeks. That's been the kind of the price action we've seen. So bear in mind that, okay? If we get, a relatively dovish shift, a slight pivot on the Fed to say, all right, we're thinking about slowing down rate hikes now, this thing could fly. I saw a report, I think it was from Morgan Stanley, may have been JP Morgan, but I think Morgan Stanley, I saw a report yesterday. I think it came out. Let me see if I can find it actually. They're saying that Morgan Stanley Fed pivot. They were saying that if the Fed pivoted, yeah, here it is. So they're saying, it's on Yahoo, not the best, but Morgan says if Fed pivot could change tide for stocks, here are two strong buys to consider. Oh no, they're actually giving us tips. We don't want that. Basically, they said that he's saying the end of Fed's tightening is nearing, and that if they pivot, they're saying that it could be 10%. Okay, so it's the S&P rallying to 4150, a 6% advance. Was this recently? Let me just double check that this was. When was that? Yeah, from the 31st of October. Yeah. So yeah, but I saw 10%. I don't know why that's only saying 6%. Maybe it was 10% on the Nasdaq. But yeah, they're basically calling for. So if we do start to get the signal to pivot, Morgan Stanley is saying it could add a significant amount. So yeah, and that would obviously come through year end and add into a like Thanksgiving / Christmas kind of Santa rally. Okay. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe, and I'll be back with you with another bull versus bear webinar to pick the bones out of what the Fed have done tomorrow. Cheers, guys. Bye.